Good afternoon and welcome to Markets Today. I'm your host, Mbithe Mwema. It's a very exciting Tuesday. We have a lot lined up for you, but more importantly, Parliament certainly has a lot lined up for the entire nation of Kenya. Speaking of Parliament, today they will come back and resume their sessions from 2:30, actually from now, and one of the key debates that we expect to take the floor is the conversation with regards to the rate cap repeal. Now recall, earlier on, the president had actually sent back the finance bill. He rejected to actually append it, and he said he actually instructed he directed that the parliamentarians should consider eradicating the element of this bill that talks about the rate cap. In other words, he wanted a full, or rather a total repeal of the rate cap. Now, the finance committee representing the parliamentarians did consider the executive's considerations, and it actually came up with a counter proposal. They did agree with the fact that the rate cap should be repealed, but however, they put a caveat and said, let the rate cap repeal affect only new loans, and in other words, existing loans should remain within the rate cap repeal. We have seen the order paper today, and what they will be conversing is this: yes, remove the rate cap repeal from the Banking Amendment Act, but over and above that, all existing loans which were already under the rate cap repeal should remain at the same price, if not a lower price. And if not that, then any new loans that are issued can be issued without the rate cap repeal. It certainly should be a very entertaining session, looking at the nays and the yays with regards to this particular debate, and we will keep you updated once this debate starts with a live stream from our end. That said, we continue to look at the banks, rather at the NSE, and the banks continue to be on the downward trend. Today, Standard Chartered Bank is one of the losers, trading down about 7% over the day. Yesterday, the Tier 1 banks, Equity Bank and KCB Bank, as well as Cooperative Bank, were all trading down 9 to 10% over the day. The excitement with regards to the rate cap seems to be tapering out, and we are seeing a correction back to valuations that make sense for the investors. That said, what happened in the month of October? We are trading 2 days into the month of November, but October was a very exciting month, especially in the tail end when the rate cap conversation started. We have some of the banks like Equity Bank closing up 25% in that 1 month alone when the rate cap conversation started, which was about 10 days before the month closed. What was happening? Who were the gainers? Who were the losers? Were there any particular corporate news that were actually moving the markets? And what should we expect in the month of November? That's a conversation that we will be having later on in the show. Prior to that, with regards to additional corporate news, we have seen the IMF come out strongly and actually review the case for Kenya with regards to its debt. Now, the risk affiliated with Kenya's debt at a national level has always been low, meaning that refinancing was not a problem. The Kenyan government could easily go out into the foreign markets, raise debt at more or less a moderate price. Now, this rate ranking has actually moved from low to moderate, meaning that it's going to be slightly more expensive for the government to go and actually access credit markets. So the refinancing risk has become higher. They'll probably have to pay a premium based on this review by IMF with regards to the national credit risk for Kenya. Circling back to the NSE, today we have seen Cooperative Bank continuing to dominate trades there for the banks as well as Safaricom. But for your information, what happened last month? What should we expect to happen this month? We are joined in studio by Mr. Martin Karemi. He is a Senior Associate Research Analyst at Standard Investment Bank. We take a short break for the daily commodity prices. Don't go anywhere. When we come back, we will be articulating the case for the NSE in the month of October, and more importantly, also evaluating what happened in the month of October. See you in a few.